Hi everyone, hope you can hear me loud and clear. Hang on, my microphone's not on here. There we go. Hope you can hear me loud and clear. Welcome to a live analysis. We're doing this via our GoToWebinar site. So there's quite a few of you in here for that. So thank you for that, Rashid, Steve, Asimi. Thank you for joining us. And we're also live on YouTube and our Facebook channels as well. So please stick any questions in the question box if you're on our GoToWebinar site. If you're on our YouTube or Facebook site, please stick it in the chat box there as well. So welcome everyone. Hope you're well. It's obviously a key day. It's live analysis today. But really, it's all about the Fed, isn't it? Likely to go 75 basis points tonight. And 50 basis points is now 50-50 chance as far as the Fed funds futures are concerned when it comes to the end of December and into 2023. So perhaps 25 basis points in the first quarter. But still, the Fed funds futures are now looking to be around about 4.9% for the first half of 2023 and only slipping to still over 4.5% by the end of 2023. So more on that as we go through. Anyway, so it's 2nd of November. Welcome, everyone. Hope you're well. Hope you're safe. Anything you want me to have a look at, please stick it in the question box and we'll have a look at it together. But trading is risky, my friends. And let me just read this out. Actually, I'll just leave this on here because we're on the site. Akimpula, hello, my friends. Hope you're well. And how are you doing? Hope you're okay. And there we are. So that's our disclaimer. Remember, it's risky trading. Leverage products are risky. Understand what you're doing, and we're here to help, basically. So those of you who don't know me, that's my background. That's my ugly mug. Some of you can see me because I've got the webcam on YouTube. Keep things simple, basically, is the rule. Probability, simplicity has always been my approach to investing and trading. Look at multiple time frames. And more importantly, though, know yourself. This business is a mindset business. It's all about understanding yourself. It's all about having an edge. It's all about accepting losing trades. You have more losing trades than you anticipate when you start this crazy business. Billy, Emma, good morning, Emma. Good afternoon, good evening, wherever you are. I'm not sure where you are, my friend. But we'll have a look at the Dow, the Nasdaq, and the S&P, the main indexes. They were down yesterday, about 0.5%. They've had a good rally in the last few days, but to see where we're going to go from here, certainly. Emma, what time frame are you interested in? Let me know. I've got a few slides to go through first, so just bear with me a second. So that's my ugly mug. So we're going to look at the news this week, how it's come out. And obviously any assets you want to have a look at. So here's our calendar. These are the high impact events. The red are the most important. The orange are the medium impact. So we've had a raft of manufacturing and, particularly manufacturing PMI data. Yesterday's US data was actually better than expected. Not much, but it was 2 ticks higher at 50.25. So remember, 50, above 50 is a sector that's in expansion, and under 50 is a sector that's in contraction. So, excuse me, we've got expanding manufacturing PMIs out of the US. That's obviously positive for the US economy, but adds to the conundrum that the Fed have got. Are they going to ease off? My own view, we'll talk about my own view later on for what it's worth, but we're going to look at the Fed data. So also yesterday, the JOLTS data, JOLTS data is the number of people that have moving from job to job, the number of job openings, as well as people churning jobs from moving from one to another. I'm saying my screen isn't bright enough. All right, it might be the clarity of the Emma, are you talking about the clarity of the calendar? Yeah, it might be. I've just done a screenshot. Okay. Anyway, sorry about that, but hopefully the charts will look okay. Okay. I hope that's going to be okay as we move forward. We had some speeches from the central bankers in Japan and Canada overnight. Kuroda and his government colleague, Mr. Suzuki, were trying to talk the yen up. The yen's come down, a dollar yen's come down a tad this morning. We've descended from 148 all the way down under 147. We'll have a look at that in a minute. German data was a bit better than expected, to be honest. Obviously that PMI data was a big miss, but trade balance was a huge bounce up. So the very important. My screen isn't bright enough. I wonder what that is all about. So is it this? That's interesting. I've never had that comment before about a screen that people can't see. I wonder if because it's split too many times, or is it just this calendar motive is saying the same thing as Emma? So we'll see if we're going to have a look at that. Anyway, German data was a bit mixed. We got the ADP ahead of the non-farm payroll on Friday later on today, so expect to be around about that 200,000 level. And then obviously we've got the big Fed statement, 75 basis points expected, but it's really the nuances, the how the statement has changed, and what and how Powell performs, not just reading the statement, but how he performs in the press conference as well, with any indication, which I don't think there will be, for what it's worth, what I think, there will be any reference to actually cooling rates by the end of the year. The market is pricing that in at the moment. I say it's about 50-50, whether they go back to 50 basis points, 50% to cut it, 50, 70, another 75 basis points. 75 basis points, it's a big hike for the US, and it's likely to certainly come this afternoon, and it could be the same later. Actually, it does look a bit fuzzy, that, doesn't it? So I want to leave this chart on. Tomorrow is all about the Bank of England. We talked about England, the UK, and the sterling an awful lot, haven't we? Another 75 basis points also from the Bank of England is expected tomorrow. See what if there's any dissenters. I doubt there will be on the MPC with regard to vote. What the minutes say, and then what Governor Andrew Bailey has to say later on, 30 minutes after. Remember, at the moment, guys, we're out of sync, or Europe's out of sync with the US. So these times are GMT times, remember. And so normally server time, it's normally around about 9 o'clock when the Fed announced it. This week, today, it's going to be 8 o'clock our time. So we'll make sure you've got the times correct. 11 o'clock GMT is our webinar time, and that doesn't change at all, obviously, but it changes server time. We're now doing it at 1 o'clock, 1300 hours server time, rather than 1400 hours as it was for all of the summer into winter time now in Europe. So anyway, all about the Bank of England tomorrow on Thursday, and then obviously top of the shop for the week is non-farm payrolls. Again, expect to be a bit like ADP, around that 200,000 number on Friday. We've also got the Canadian jobs numbers at the same time as well. So it's a huge week. We've had the end of October on Monday. We've got the new month kicking off. Lots of things going on. Obviously, next week we have political issues. Are the midterm elections in the US? It's not actually on here on this economic calendar for next week. So economic calendar-wise, data-wise, it's much quieter. It's all about CPI data. That obviously remains key to the Fed view going forward into December and into 2023. But midterms, Biden likely to lose, or the Democrats likely to use both the House of Representatives and the Senate. So will he become a bit of a lame duck president for the next 2 years, and his spending and his ideas quelled by the invigorated Republicans? And obviously, how does that all play out politically? Will Trump come back? Will Trump look to run again in 2024? We shall see. So Monday, the ADP report is in a little over there we go. ADP is today, so it's in a little over an hour or so. Okay, it's at 14:15. It's currently 13:15 server time. So an hour from now, an hour earlier than normally as far as server time, because we're out of sync with the US. So 200,000 is expected. So that's where we are. Big, huge week. Bank of the Bank of the US, basically the Fed, then the Bank of England. We've had the Bank of the RBA earlier in the week, the Australian National Bank, hiking not as much as expected, but still talking about inflation being a big issue, and that's the major driver and problem for all central banks. This target they have of 2%, all developed markets are way over that, except the Bank of Japan, where they're continuing to keep their easing policy in place. And yesterday, the Bank of England started quantitative tightening, the first bank to do so. 750 million of their bonds were sold off. The ones that are acquired was sold off yesterday. So quantitative tightening is here. It starts with the Bank of England yesterday. So let's have a look at what you want to have a look at. So anybody on the webinar, please stick your requests in the Facebook. The question box. Anybody on YouTube and Facebook that can see me, obviously you're sticking your questions in there as well. So let's see if that shares. It doesn't actually share on my screen for my webinars. But Emma's been first up. She's asking about the Dow, the Nasdaq, and the S&P 500, or the US 500, the US 100, and US 30, as we display it as a CFD here. So let's start with the most important, which is the US 500. Where's it gone? There it is. Let's bring it up. Emma was asking about the daily time frame. The 4-hour time frame. Can everybody see that? Okay, the black charts. Hope you can. Let's have a look. Yeah. Okay. Nobody on. Everybody's quiet on the webinar. Sorry, I'm trying to multitask here, and it's not it's not the greatest thing for somebody like me to do, unfortunately. A little trend line here from the low of October, when we pitched into 3,500. We've rallied from there. It's been about an 8% rally for October. Very, very strong October. In fact, the US 30, we'll come to the US 30 in a minute, Emma, but US 30 had its best October since 1976. S&P 500 was up. I wrote the numbers down yesterday. Sorry, let me just. I can't remember what it was. Yeah, so the S&P was up nearly 8%. I thought it was 8% for October from its lows. So over the key 50-day moving average here, as we came to the end of October, this is key now. And the 20-day is down here. We breached the 20-day initially here in the middle of October, again the 18th. So it's been sort of steadying up since the middle of October. Whether you believe the fundamentals or not, technically it's sort of trigged higher, and that was a big move up higher here as we went over 3,900. As far as the 4 hours concerned, which is your trading time frame, Emma, we've rolled over in the last 2 or 3 days. So the 4 hour here, as you can see, still ticking high, relatively ticking high. This is the daily trend line support. So it's been tested. So that's your support. The blue line, sorry, let me just get that. The blue line is is our daily trend line, the aqua line. The dark blue line here, this is the 50 period moving average for the 4 hour time frame. So that's support here. It's still sitting at just shy of 3,850. So that's key support. If you zoom this up again for the 4 hour, you can see how it's rolled over, and the 20 period moving average on the 4 hours flattened out as well. So 3,850 is your key support. Then it's the 50 period moving average, and then it's this, which is sort of riding with this daily trend line as well. So support as we go forward here for the S&P at 850. If it's going to break higher, I'd like to see it break this channel significantly. It needs to break above the 3,900 level, Emma. And here you can see the top of the channel is really that rally we had as we closed out the month, which took us to 3,925. Zone. So above 3,925 is very positive. Over 3,900 is still quite positive. But below this level where we are now and 3,850 is relatively negative. So that's the channel the 4 hour S&P sits in, and the Dow and the Nasdaq are very, very similar. Emma. So let's have a quick look at those for you as well. Thank you for that, Hillary. We'll have a look at, you're asking for pound, yen, euro, and pound, the cable. So main crosses there. We'll have a look at those in a minute as well. But Emma was first up with the Dow, the Nasdaq, and the S&P 500. That was the S&P 500. The Dow the next. So this had its best. This is the daily again. This month here, this October month. This is best month performance since 1976. So a huge rally for the Dow in October. It rallied 13. What did it do? Yeah, 13.95%, nearly 14%. A huge up candle here, as we saw. Whoops, let me zoom this up. As we saw here on the 28th, before we on Thursday, Friday, and then Monday here we closed. Oh, hang on a minute. That's Friday. Sorry, we're talking about that's Monday, and that's Tuesday. It's new month day. So big candle to close the month out. Bit of profit taking on Monday, but still very well bid. And again, here you can see with the Dow here, the daily, the 50 days down here at the 31,000 level, or just below the 31,000 level. So on the 4-hour trading platform, Emma, you can see it's done a similar thing. It's not rolled over as much as the daily time frame. So it's struggled here to 32,900. It couldn't quite get to 33,000 on an end of candle basis. Oh, it's much short of that. So it's again another one that's consolidating. Here you can see it's consolidating above its 20 period moving average. So here for the Dow, your initial support today is here at 32576, and then the big support here is that 50-hour or 50 period moving average, I should say, which is coming up to the 32,200 level. So 32,200 is big support. Initially 32,000 here, 32,550. Resistance is, obviously the big line is at 33,000, but before that we got 32,900. So again, another one that's consolidating. Obviously, not much action is anticipated to break in this range ahead of the Fed later on today. So see if this holds to the downside, or see if this breaks to the upside. And the Nasdaq, the most volatile of the three. That's the Nasdaq here. That's the hourly. Let's go back to the daily, the others. So again, the Nasdaq rallied up, but weaker than the other two. So the Dow's led the recovery. Nasdaq's weaker. It's still below its 50-day moving average. So resistance to the upside sits at here. Whoops. Has sat here for a while. This 11,600 level now, which we tried to get through into October, but less of a recovery. It was about a 3% recovery, 3 or 4% recovery for October for the Nasdaq. So immediate resistance there on the daily time frame. So your 4-hour resistance is here at 11,633, so called 11,630. And here, interestingly, we're at the 200 period moving average here for the Nasdaq. So the Nasdaq is weakest of the three. We had that big sell-off yesterday for Google and Amazon. They were both down over 5%. So tech stocks remain pressured. The big support for the Nasdaq, as you can see on this 4-hour chart, is this the big round 11,000 level. So we're still 300 points above that, but this is a key support. This needs to hold if the rally in the tech stocks is going to continue. But at the moment, as you can see, it's very flat. The 20 period is flattened out here. That on the daily time frame, we've had this low that took us down here to 10,500, but we need to get over 11,600 where that 50-day sits, and the 20-day is being flat for the last week or so. So that's the issue with the S&P 500. Okay. Next up, I hope that answers your question, Emma. Good day. Pound asks Billy. Yeah, we'll come to those next one. Yeah. Okay. So Billy's asking about the pound, and so is Hillary. Yes, Steve. ADP is it used to be quite a strong. Let me just do the pound, Steve, and I'll answer you. I'll come back to your question if you don't mind. So sterling, Billy asked, and Hillary's also asked on our webinar as well. So sterling, obviously, let's go to the daily time frame again. This is a bit messy, but sterling again, another one that's recovered from these 104 lows or 103.50 lows. The crisis of the quasi-Kwarteng budget and Liz Truss budget. So sterling's recovered somewhat from there, that 104 low, but it's still, it's a technical level. It was tested there. It's a 37-year low, so don't rule that out at all. But at the moment, the levels that are in play as we've gone through, as we've gone through October was the 110 level. 112, and now 114, 115 level. So we moved up. This week, we've moved as high as the 116 level. I don't know what time frame you're interested in trading this, Hillary, but and Billy, none of you have asked, but you can see here on the daily time frame how the 116 level has been rejected into the end of October and earlier this week. So we've rolled over that, and now 115, big psychological level is coming into play. So if we go down the time frames, you can see 116, we can't hold it. We've rejected it again, moved down, but we don't want to move under. We're currently pivoting through 115, and we don't want to move under 114 as far as the 4-hour traders are concerned. So big range here, big 200 pip range thus far for this week and for November so far for cable traders. Tighter 1-hour traders, again, lots of volatility. There's that 116 being rejected, a big 100 odd 40 pip move down to 115, rallied again, big sell-off yesterday again into 114, 40 yesterday, and then into the 200 or the 200-hour moving average. So for the week, this is our support level. So the going forward today, support sits at 114.20. So 114.20 is our support today. Our resistance doesn't want to drag away much from 115, does it? So we're pivoting through 115, but we can't get above 115.20 level, basically. Hillary saying the 4-hour on the day. Okay, we've just done the 4 hours. So that's the 4-hour has that big 200 pip range, Hillary, 116 to 114, a bit tighter, 114.42, which is what we've seen today on the intraday level. So that's your immediate support. On the 4-hour time frame, you can see that the 200 periods all the way down there. So all the way down there at 112.42 from the hoo-ha we had, courtesy of Mr. Kwarteng and Ms. Truss, when sterling got clobbered all the way down to 104 here at the end of September, and again tested this 105, 106 level towards the end of last week as well. So we've rallied quite significantly there, but let's see where the dollar goes from this on what the Fed have got to say, and obviously the Bank of England tomorrow. So that's the next thing as well. So be careful trading this before these major announcements. Remember, the most significant thing that can happen to a currency is an announcement from the central bank. So, we're having the most significant thing that can happen to a currency for the dollar and everybody else that trades the dollar against the dollar today, and for sterling is tomorrow. So be careful about that as well. Okay. Parwan saying good evening to you, my friend. Jester saying good afternoon. Hopefully, Emma, the screen's better now, is it, with this chart? And I hope it is. Forex Trader's asking about gold. Let me just finish. I'll come to gold in a minute, Forex Trader. But Hillary was also asking about pound yen and the euro. A lot of you others are also asking about the euro. So let's start with the euro. So here, last 4 days we've been lower. We breached parity here. This is the 1-hour time frame. We breached parity briefly last week, but we couldn't hold it for more than a day. In fact, we couldn't hold about a day's trading, wasn't it? We were just over parity. That's the 1 level. And then for the last 1, 2, 3, 4.5 days, we've been under parity. So we've been trending lower, the euro. The highs have been getting lower since this rally to 10100. And the lows have also been getting lower. We currently had a new low today. So that was yesterday's low, 80.8972. And we've put in a new low already today. So the new low now is 89.50. So that's the next support today as we go forward. We've rallied up a bit. Let's zoom this up on the euro on the daily on the 1-hour basis. So today, obviously, we'll wait till the big news breaks later on. But the 50 has crossed under the 200-hour. That's a negative. So we got key resistance at 99 itself, or just over 99 itself. It's at 99.09. So that's our resistance today. So far, we've traded to 89.70, so above yesterday's low. But yesterday's low is the next support level. So 89.50. 89.75 is our support. We pivot through and have resistance at 99 and 99.10 is our first support. And then yesterday's high, which took us to around about 99.50 test, is our resistance to the upside. So some clear areas there going forward for euro. 89.50 needs to break if we're going to move lower. Clearly today we need to break 99 and 99.50 if we're going to go higher and perhaps test parity again. But as I say, in the higher time frames, the trend remains very much down from the end of October into the beginning of November. And the daily time frame here sort of bid, isn't it? It's rallied up, but it rallied up over parity and it came back down very, very quickly. So it sold off very, very quickly. We're back under the 50-day move now. It's that blue line, and the magenta line here is the 20-day move now. And we're right on that where we are now. It's 89.75. So 98.50 is a key support area. If that breaks, there's lots of black space under there, isn't there? There's no support. The next line would take us to 97.75, and then below that takes us to 97 itself. So if this 98.50 level breaks, it's a big move down there. Yeah, and Prayers just put that on. Bagani Prayers just said here on our webinar, he's saying Euro is a sell after a break for the major support 89.53. Yeah, 89.50. Absolutely, that's clear from that chart as well. Sorry, let me just go back to who was asking it. And and finally, Hillary, you were asking about pound yen. So let's just do this for you, and we'll get to gold for Forex Trader in a minute. So pound yen looking pretty spiky this morning on to do with the rally we've had in the yen. So another one here on the 1 hour chart. This is pound yen, the guppy. The Widowmaker is also known. Remember, it's got a bigger spread than most of the other major crosses, but can move an awful lot of pips. So be careful. 33 pips is a typical 1 hour move here. You see that on the ATR? That's what that's telling us there. If we go up to the daily time frame, this pair can move 250 pips easily. So 237 is the daily ATR. So as you can see here on the daily time frame, it's relatively well bid, but it's run out of steam at 172. And we're currently trading at the moment today below 170. So this daily time frame remains bid. On the daily time frame, Hillary, we've got key support down here at 67.75, which is where the 20-day moving average is here. So if we just scroll down to the lower time frame, so daily still bid, although it's rolled over for 3 days. So if it holds here, that's relatively strong. It can hold 69. 68 is that dot through there. 4 hour has rolled over and gone short here this morning. In fact, no, yesterday morning at 8 o'clock. Hasn't moved much lower, but that's the 4 hour crossing strategy. Sort of flat, that nice rally up. Now we closed out there and finally gone short yesterday morning. So the 4 hour traders using this crossing EMA strategy went short yesterday on the conclusion of the 8 hour candle, and they're still short and trading that lower. The 1 hour traders were short earlier in the week. Again, seeing we've had the major high here. We initially went short here on Halloween at 1500 hours. Went against us a wee bit, but still, it's out and then short again, out, short again, out, short again, and then short again here as we've gone back under, and it's legged down for the rest of the day. So that's remained short here on the intraday. MACD signal line falling, the histogram's under negative, and RSI fairly negative at 36. So we maybe run out of steam, but as you can see here, where we've been this morning corresponds to where we were last week. These lows down here at 168.70 on this 1 hour time frame. But so the hour's short. The 4 hour is triggered short earlier yesterday, as we said, and the daily on this setup is still long, but it looks like if this closes out under this yellow line here, that would have closed your long from here, because it's going to close under that 9 period EMA. Maybe so you've had all that profit there on that rally up looking like 6,000 points or 600 pips from 163 all the way to 169, so 600 pips on the end of day basis for guppy traders to the upside. Okay, Forex trader, I'll come to gold in a minute. I just want to answer another question here. Steve's asking about is today's ADP change a pre-indicator of NFP? Yes, it can be. It used to be quite closely correlated to NFP, the ADP, private payrolls, Steve, but then it got a bit messy and they changed it. And where are we? So it's not anymore, or it wasn't anymore. They've taken it away and recalibrated and just brought it back in September. So this is the third month of the new ADP reading, and it's expected to slip a wee bit to 195,000 in about 45 minutes. So watch that later on today, guys. As I say, the headline NFP is also ironically around about the where's that gone? I was lost track there. The headline non-farm payroll is also around about the 200,000 level as well. Remember, the ADP is only private payrolls. Non-farm payrolls is the private payrolls plus any government jobs, but not the farming jobs. That's why it's called non-farm payroll. Okay, so that's answered your question, Steve. Bagani says thanks. Hillary says thanks as well. Very good. Thank you for being here, my friends. Anything else, please stick it in the box. That's what we're here for. Gold was next, wasn't it, for a Forex trader? I need a sip of water. My voice is going. So again, depending on your time frame, Forex trader, here on the 1 hour time frame, we've been down to 1630 just as we've started the new month. So that's our monthly low for November. If we go to the daily, let me go to the daily time frame. You can see 1620 was our September and our October low. This is the September low here, under 1620. It was tested again in October. So this is a key level, 1620 for gold. We slipped into the month end. But as you can see here from the 20-day moving average, gold is still short. It's under the 50-day, sits all the way up here at, it's got high, over the 16, in the 1680, 1675 zone. That's where the 50-day is. The 20-day now is between the 1665 and 1660. It's actually gone under 1660, so it's coming down. So 1660 is key resistance to gold moving higher. And as I say, yesterday we tested $30 below that at 1630. We're currently trading around about 1650. We've had a relatively strong day. So it remains, so gold remains in this sort of downtrend, not in a sort of downtrend, in a downtrend. Not sort of downtrend, in a downtrend. That's the 200-day moving average all the way up there at 1760. 50-day there, as I said, at 1680, and the 20-day there at 1660. So they're the key moving averages, all of them sloping down, all of them nicely aligned, not too much of a steep slope, not too much of a gap between them, but still the momentum's down there. So big support is 1620. Buys down here in September, buyers down here in October, but can it last? You know, the lows here, if we go back to summer, was around about the 1700 level, wasn't it? But we breached that significantly in October and in September and October. So to the upside, zoom this up. So to the upside, we need to break the 1660, 1665 level, I'd say, to strength, and to the downside, certainly need to break below 1620 to go down. On an end of day basis. If you're more interested in lower time frames, you see the 4 hour did test that 1630 and it's rallied off there. So that went long here using this crossing strategy, having been short here into that nicely and then out there. We then went long here, got a bit of up and down. So that the 4 hour traders are still long from 1650, and we currently trade at 1655. So the $5 to the good at the moment, still trekking high. We're over the 20 and the 50 moving averages there. They're still quite aligned, a bit mixed up though there. The 5 has got mixed up, so that's looking a bit dubious. The 1 hour traders, what would have happened there? Last long from this short here would have ticked higher here yesterday at 5 o'clock in the morning. If you were trading that up, out then, back long then, back out there, back long here. So you've gone long again this morning, and that's ticking up this morning intraday from a last trigger here at 3 o'clock this morning at 16.50 again. 16.55. So we're $5 to the good out intraday 1 hour gold trade. I don't know what time frame you're trading that, Forex trader. So Emmanuel says hi. Munya says, when is US ADP employment report and how is it going to affect Euro USD? Well, it's going to be, Munya, as I said earlier, it's going to be I've done something wrong here. I've just got a message. I shouldn't have sent those push notes out. It's going to be about half an hour, 35 minutes ADP. Euro, you're asking intraday is wait and see, basically. It's waiting for the it'll react to the ADP because that's what market makers might want it to do. They might want to move it up or move it down. But technically, intraday here, Euro, Munya, has that big support, as I said earlier, at big resistance at 99.09. That's where the 200-hour is. Obviously, before that, we got the big round 99.99000. And then support is here at 98.75, which is our low of the day. And as our friend said, who was it? Let's repeat. Bagani said earlier, he's absolutely right. 98.50 is a big support area. If that breaches, we're going to move lower. So the higher time frames remain in a downtrend. I'm trying to move up here on the daily. The 4 hour has moved down quite significantly. Oh, he's moving down significantly. There's that 98.75 support we talked about, and then the 98.50 breach. So that's the levels to watch today going forward, whatever the ADP number is. If ADP is strong, i.e. significantly over the 200,000, something like 300,000 or 250, 60,000, something like that, that will aid the dollar because that will push the expectations that the Fed, or this what it should do, not necessarily it will do, that the Fed will remain. Well, I say tonight's number is definitely nailed on. It's too late to colour what Jay Powell may say. He may get asked a question about it later on in the press conference. But who knows? I don't know when they write these things. But I would guess most of it is written already. So just the data that's coming out on the same day, very likely to not change things. But it would have to be a big shock from private payrolls. What the Fed are looking for, or what the sort of the doves are looking for, is or a chance to start easing the interest rate hike cycle, is a cooling of the jobs numbers, and we didn't see that yesterday with the JOLTS numbers. Who knows what's the ADP is going to show us today? If it does show some softness, that will cool the dollar. If it shows some resilience, that will give the dollar another leg higher potentially from where we are. So that's the impact on. So watch those levels, and it might even bring in the parity level as well, Munya, for euro dollar. Okay. Right. Lucinia Bryan says, just hoping the dollar will make a comeback after the news a bit later because USD yen buy is taking a big knock. Okay, well, I don't know how you said you went long. I don't know what time frame that was, Lucian, but that the move today on the yen was to do with what the comments from dollar yen was our biggest mover this morning. It was down nearly 1% at one point. In fact, it probably is now because it's gone on 147. The comments from Kuroda and Suzuki, the two most important people that are going to impact, their comments are the biggest impact on the yen in Japan. So, it was looking okay at 148, but it'd been down yesterday. We've been to this 148.85, but it's been incredibly volatile with the intervention from the Bank of Japan. But on a negative point for the yen, they said they weren't going to change their easing policy at all, but they're trying to talk it up this morning. They were talking about the yen moves are excessively one-sided. It's very negative, understandably, for the Japanese economy, a very, very weak yen because it's a huge exporting nation. Obviously, it means their exports are more expensive. Their imports are more expensive. It's good for their exports because of the weak yen, but They do import an awful lot of stuff as well. And that, as I say, they were insisting that they weren't going to change their policy. Suzuki talked about prepared to intervene again, which they clearly did towards the end of September. We saw this huge intervention. So I don't know what time frame you're on that, Lucian, but yeah, at the moment, it's very much trending lower. It's breached 147 in the last hour, but it's come back over at the moment, 147.10 at the moment, but that still looks pretty weak to me for the day. Okay. Michael's next from YouTube. Oh, no, Michael's next from Facebook. Please, can you analyze the current bias on dollar yen? What should we be expecting, bulls or bears? Well, that's a good question. Well, at the moment, the current bias is to the downside. We've rejected 148.85 here yesterday and on Monday, having rallied up quite significantly. So this level we've rallied from last week becomes now into play at 146. So the big round numbers, Michael, on dollar yen are very much in play. So we dipped from 148 for 85 all the way down to 147 yesterday. We then rallied back to 148 but couldn't hold it. And then the intervention from the two officials in Japan dipped us under or towards 147, and we breached 147 in the last hour. So that remains biased to the downside on an intraday basis. Obviously, the next announcement from the Fed later on today will be the next mover of this pair. So the downside, very much 146 in play, and even 145 here, the yellow line all the way down here. You can see that very much in play. Sorry, not could come in play. Depends how aggressive how the markets interpret what Powell says. But at the moment, going forward for the rest of the day, 148 is our resistance. 148.85 yesterday and Monday's highs. Upside resistance support is 147. 146.40 is through there for some reason. I don't know why, but it is. It's on there for a reason, presumably. And then 146. That's the way it's going. Depends on how you interpret what the Fed now says. Obviously, earlier we had a move against for the yen against the dollar from what the Kuroda and Suzuki was saying earlier. Okay. Boangi saying it's a buy because it's up. Boangi. What were we talking about there? Euro. Yeah, well, maybe. If your system is saying buy, Boangi, go with it. That's it's your view of things. Bibi, we just done Euro, but let's go back to it because Boangi's just saying it's a relatively buy. But there's again, if you're a 4-hour trader, you've got big support here at the 200 period moving average at 98.75 and then 98.50. Okay. The resistance is that 20, initially the 50, the 20 zone there at, the psychological 99, and then the 99.10. That's where Euro's sitting at the moment. That's what but here, MACD is still negative, maybe flattening out on the 4-hour. It's all about your time frames, isn't it? Whether it's long or it's short or it's sideways, all about time frames. But what is the other high time frame doing? So, if I was a 4-hour trader, I'd say, what's the daily? Well, the daily still looks quite weak to me. It's had a breach of the 20-day. It's got over 50. It's gone back under the 50. And now it's supported right on that 20-day. So it's a wait and see. It's going sideways. Last time it did sideways, it went all that time and then it went down. Here it went that way and then it went down. So the bias still is, to the downside. The moving average is still pointing, although they seem to have flattened out a bit after this big rally we had in October, relative rally we had in October. But remember, we did test 95.35 not that long ago at the end of September. Obviously a month ago, but again, depending on your time frame. More bears and probably. Who knows? Who knows how it goes? Rodney, hi. How are you? Hope you're well. Hello, everyone. Perhaps it's good, guys. Good. Euro. Somebody's asked for Euro here. Any more on the webinar? We've done dollar yen. We've done pound yen. We've done the euro. We've done sterling, ADP. A few questions about that. We've done that. Euro here again. This is the daily. Looks like it's up, but big resistance at 99.20, where that 50-day moving average is. Luali, Donald, hello. Apple and G&M. That's an interesting handle, my friend. What happened to gold? Bullish or bearish? Gold, again, it's all about your time frame, my friend. The stronger the dollar gets, the more pressure that'll be put on gold. And it is really all about the FOMC later on today. But it remains this is the 1 hour time frame for gold. It remains relatively bullish over the last couple of days. It broke over its 20-hour moving average here yesterday morning at 5 o'clock, and it hasn't been under it since. So that's relatively bullish, isn't it? All the way when it was down here at 16, around about 1638, 1640, and it's continued to rally. So it's broke later in the day. It then broke the 50-hour moving average, and it's held that as well. So up to 1655, couldn't hold it, down again yesterday, but now support is over the psychological 1650, and we're now pushing to new highs for the day, or we have done, and testing yesterday's highs. So next line in the sand becomes the key 1660, 1665 region on a higher time frame. So this is relatively bullish, has been since yesterday, and continues to the upside today on that 1 hour time frame, Apple. So that's trending higher. This strategy would have been long, got out there, got long again there, and is still long, got out there potentially and got long this morning. So trend following traders would have been long from 1650 at 3 o'clock this morning, and they're $5-6 to the good, to the upside for gold. Currently ahead in non-farm payroll, but obviously not for non-farm payroll, ahead of the FOMC later. So see how that pans out. FOMC, absolutely the most important thing that's happening certainly this month. It's been a long time coming. Bitcoin, somebody's asking about Bitcoin. Interestingly, Bitcoin looks like it may be coming back to life. It's in very sort of simplistic terms. So this is this is my Bitcoin chart here. So we've been rocketing, we've been lumbered. Support was 19,000. We rallied a wee bit, couldn't get a 25,000 here during the summer. And then it's drifted down, hasn't it? Well, not drifted down, but trended down really nicely into the end of the summer and into September. And then it's just sort of bounced along this key 19,000 level, hasn't it? It didn't want to go much lower. Tested to 1780, 800 intraday stuff, but it didn't really want to below 19. So 19,000 was this big support level below the psychological 20,000, which is the blue line on here. And in the last few days, we've had a relatively significant rally. So we had a big move here from a technical perspective, although it's not trending as such because we've got very flat moving averages sort of looping along, still very, very channel bound. So this $1,000 range between 19,000 and 20,000 was looking for a break, and it may be coming to life. So you can see it's very tentative. So we had a big up day here on the 25th, which followed through on the 26th. So last week, Thursday, Friday. No, it's not Thursday, Friday, was it? When we're talking about that, it was earlier in the week, wasn't it? Yes, we broke over 20,000, and we've held it ever since. So it's interesting. It's not a massive trade. It wouldn't be a massive let's go for this now. But this looks like this may be moving out of this range, but it's far, far too early to tell, and it's doing it in small pieces. So there may be, as remember yesterday's webinar where we were talking about players, accumulating. Remember what we talked about, block trades and trading, the big players collecting stuff down at these congestion levels. Well, that may be what's been going on during the summer, during September and into October as well, at this 19,000, this 20,000 level. It may be what's going on. But, tentatively, on an end of day basis, this went long here on the 25th, and it's been long ever since. Stop loss down around here somewhere at 19,000. And we're currently trading 20,500 and going sideways. So 21,000 needs to breach. And then you look to the left. Where's that? Well, next left takes us to this big Yahoo we had up here at the beginning of September, which took us to test 22,500, wasn't it? So 21,000 is now resistance, then 22,000, and lo and behold, possibly 25, 24,000. But you know how quickly Bitcoin can move, Mohammed. I'm sure you are. So yeah, that's sort of how I'm looking at it. Again, technically, it's not really. It's not really doing a significant deal as a trend following trader because it's flattening out. But this angle that started here on the 2050 started to tick up, but it's rolled out, hasn't it? So we'd like to see a break of 21,000 to try and start pointing these moving averages back up. But they still remained aligned. We got the 21, the 9, and the 5. So it's still looking okay, but it also may be just consolidating and running out of steam again. So we need to break away from the 20,500, but it's relatively positive because we're over the key 19,000, some 1,200 behind now, and 21,000 now becomes resistance. Well, that answer your question, Mohammed. Shadrach, Swissy yen and New Zealand. Different pair. Why not? There we go. Shadrach, thank you for that, my friend. Just grab it. YouTube voice. So Swissy yen. I certainly haven't got Swissy yen here, so let's make sure file. Let's open a new chart. Swiss yen. There we are. Should we do a different template? Do you want a white template, Shadrach, or are you happy with the black template? Let's do we use the same template all day, so let's keep with a simple crossing. This one, there we go. Shadrach, intraday, that looks weak. It's moving down, isn't it? Rolled over. Where are we? Let's put some lines on here. 147, 148. So 148 is the big round number we've been playing with. And we've breached today. There's 148. For you. So you can see it. There's 148, which was support on our Tuesday and Monday. Resistance here on Friday. Breached it again today, so we're down again. Our high yesterday was 48.66. Our high the day before that was a tad higher at 140. Oh, we didn't get to 149. No, it's 148.78. So we started to move down. This is trending lower. We got at the 4 hour. That takes us, our high breached the 150 level, 150.55. So 150 is the key level there. As we rallied up here towards the middle of October, then we shook out quite significantly under 148, and we're back under 148 now. So we're at a low here for the session here. So 147.20, and we've tested that already today. So that's moving lower. Below that were these lows here, which took us to 146.36, and then the low on this particular screen is so I'm going to go with took us all the way back here to 11th of October. Where's mine? Which took us to 145.50. So that's to the downside. Needs to break that 148.65 level to the upside on the 4 hour. 1 hour traders, again, short yesterday, short today, moving down. We go back up to the daily time frame. Shadrach, I don't know what time frame you're trading it, but somewhat range bound, isn't it? It's topped out. So 150 is big resistance here in October, similar resistance in September, but we'd rallied quite nicely for September and August, out of August. But if this September and October low at 145 blows, we're going back to this, or you could argue we go back to this level here, which is our high here for June, our high for July, and our high for August. So our highs for the summer is now next level of support at 143. So 145.25. Our lows for September and October is support, then 146 on the 4 hour and 147.20 on the 1 hour. So there's the levels to the downside, there's the levels to the upside, Shadrach. And the other one was Kiwi. Kiwi's, had a interesting few sessions as well. So big move down here to 55 in October. I'll put that on this 1 hour time frame. So to 50, it went actually under 55, didn't we? Not quite. I thought we had. Perhaps not. So 55.50. So it's a big, low, and so that's been tested. And then it's recovered like many of the other dollar crosses into the end of October. So again, this one went long on an end of day basis here on the 21st, and it still remains long here from an entry at 57.57, and we currently trade at 58.75, so 100 odd pips to the good there. But that's a key resistance where we currently trade now at 58.75. Maybe some profit taking there. And you see, we started positive for November. We finished at highs down 64 and testing 65 in August. We may recover that as we go up. But next resistance is where we sit exactly now, 75, and then 59 and 60 to the upside for Kiwi. But on an end of day basis, that was quite good. And if we come down the time frames, 4 hour, again, supported by the 20 period, out, back in. That would have gone long again from here. On the 31st, so 58.75. We need to breach and break away from it. Resistance here towards the end of last week. We tested it and gone over it, but we can't. Last candle was quite positive, so 58.75. Let's break away from it. Support for the 4 hour trades at 58.40, where that 20 hour is, and then obviously the big round dot 58 itself. Shadrach on the Kiwi on the 4 hour. 1 hour traders would have tracked high and then reversed yesterday on that quite significantly, quite aggressively on the JOLTS numbers and the PMI numbers, but it had a strong day before that, hadn't it? So I don't know if you got burnt on that, how that worked out for you, but then drifting higher into close, but volatile, and then triggering long this morning here at 4 o'clock. And it's continued to track higher. So yesterday's actual high, intraday high, took us to 59, but it didn't like it, did it? It rejected 59 very quickly. So on an end of hour base, we want 58.90, which we've already tested again today on the intra. So that's our next resistance, 58.90 and 58.75. Let's hold this. We're going to go. We may go higher. Intraday support is here at 58.65 basically. Okay, so where we are now, 58.75 key, as you said here on this end of day basis as well. So next line in the sand, dot 59 for Kiwi traders. Shadrach, hope that's going well for you. Where am I? Where's Shadrach gone? There he is. What's the best entry for gold? It depends how you're trading it, Apple, my friend. Dixie, prediction for today's data. Well, obviously the data is out in 10 minutes now, the ADP. I'm still here, so we'll have a look at that. So the Dixie today has cooled from this 1150 high we had on Monday, and again that we tested yesterday. We'd moved down yesterday, the weakening dollar. Then we had the strong JOLTS and the PMI data. So we tested 1150 again, but we rejected it, and then we've moved down. We've been moving down all day, basically. So, obviously not a great deal of action is going to happen unless ADP is a big surprise before the Fed later on. So 111, big round numbers are support today. Then below that is 1075, and then we got 1050. So 3 big round numbers in play for the dollar index today. To go higher, we need obviously first get over, hold 111, break the 20 period moving average on an hourly basis at around about 11.15, then the 200 hour, which sits at 11.25, and then test yesterday's high and Monday's high at 11.50 to the upside. That's what technicals are saying. Ali, I don't give predictions. I'm just showing what the charts are telling me at the moment. It's biased lower dollar index ahead of ADP and let me string this. The FOMC later. Lucian back on the webinar. I'm fairly new to the FX market, so which analytical tools will be best to use to make decisions on Forex trading? I'm definitely attending as much of these webinars as possible. Thank you, Lucian. It's not about strategies, Lucian, success in trading. It's about yourself. Watch my risk management webinar. It's about understanding yourself. Trading, there's all sorts of tools, there's all sorts of strategies. This just happens to be a trend following strategy. I could put on a very different view. I don't know. Where's my different views, like different things. This is this one here. This is stochastics looking for a retracement approach with Bollinger Bands. This is looking to sell once it hits the outside of the it's actually euro on the 5 minute. So it's really the time frames that you trade, the strategy you trade. But what this strategy would tell you is, we've hit the outside of the Bollinger Band here. We're looking to go short when the stochastics cross. So we don't get short until there. So we've gone short here at that moment there. Now we trade that down all the way to the middle line of the Bollinger Band, and hopefully, it keeps going, goes through, but it didn't, and it crossed again long there. But we haven't touched the outside of the Bollinger Band, so we're not doing anything here. It went to the outside again, and we got short. It would have got short at that candle there, bottom of that candle there, and we got that little bit there to that. But anyway, it's really. Let me go back to my default profile. It's about finding something that works for you. All these strategies here, or these approaches, all of them work well enough. It's how you apply them, Lucy, my friend. So watch my risk management very well. Hopefully you'll find something that. Pagani, dollar index down after breaks 11. Yes, if it actually does break that 111. Dollar index in 1 day time frame gave you morning start. It may well have done. You're right, Pagani. I might have missed that. I don't follow the patterns ideally. But yeah, for me, 111 is obviously a big support. It still looks pressured. Actually, sorry, daily, you were talking about. There we go. Bang, it has bounced. But it needs to get over 1150 on a end of day basis. Pagani, you're absolutely right. Do you have access to those strategies as a hot forex flying? Hillary, of course you do. They're all watch the other webinars. So you come onto our website. This is our analysis page, Hillary and everybody else. Okay, so that's where we write our stuff. That's my ugly mug and Andrea and Aldo from Mexico, and that's Adi from Indonesia. For us on there. If you go to the webinars, Hillary, and our YouTube channel and our Facebook channel, these are all obviously the up and coming webinars, so in different languages as well. So tomorrow's is going to be a technical indicator. If you're interested in technical indicators, Hillary, you mentioned that. Oh no, it was Lucy who was talking about his new stat. Join Otto tomorrow, 12 o'clock, not 11 o'clock GMT. But if you go down to the past webinars, all the strategies, all the other webinars we've done are here on our past webinars site. Lots of them in different languages as well, for different strategies. Okay, so price action trading with Andrew was last one here on the 20th from the 25th. Fibonacci is a technical indicator. Andrew's pitchfork is a technical indicator. Art of price action as a strategy. Scalping strategies. Watch this one here if you're interested in short-term things. Seasonality, harmonic patterns. There's all sorts of strategies. This is a Bollinger Band, the stochastic one that I touched on, that I just showed you, Bagani. So Hillary, I should say. Sorry. Rate of change, another really underestimated oscillator. I really like that one. Not many people use it for some reason. But the most important one you can watch, Hillary and Bagani and Lucy and all of the new, is this one here. How to improve your mindset, your trading mindset. This is the biggest issue traders have. It's a psychological business trading, and you've got to accept that you lose a lot. And most people can't do that and cope with that. But if you keep your risk small, you can be successful. You can have a lot of losing trades and still make money. Sounds a bit odd, but watch the webinar or come to one of my seminars when you see me face to face, and I'll explain that in more detail. So anyway, there we go. Yes, strategies are always available, Hillary, of course. Where was I? I was talking about Dixie, the dollar index. Yeah, 11.00 is support, 11.50 is resistance ahead of the Fed. Looking for an update. Ali's asking about, what's Ali saying there? Something about Iran. Iran. I can't see. Ali, what is world news like? Iran giving arms to Russia. Well, that's not great, is it? But yeah. It's not great news, is it? Gold, we did. Apple, how's it fit the dollar? Definitely bearish. How do I scalp? The euro? Looking for predictions. Everybody who talks about predictions, don't think about, react. Don't try and predict. The best traders react to the news. They react to the charts. They react to price action. They don't predict. Okay. What is my trend? What am I trend following analysis? What's my trend following analysis telling me? Well, at the moment, here, Eugenie, that the 50 period is still resistance. We breached over it a wee bit, but it didn't last for very long, did it? It also happens to be around about parity level. So euro, it's still sort of biased to the downside. However, on the flip side, it's rallied from these lows at 93. 95.35 at the end of September, and it's sort of moved up generally during October. As far as this strategy would have you trading, this strategy would have went long here on an end of day. I'm talking about the end of day now. Here on the 17th of October, our stop loss would have been down here somewhere behind our entry. We got in here. Our stop loss is here. It's probably up here now, and it's moved up quite nicely. Depending on how you're taking it, how many, what your risk reward is, you would have got at least one or two there. Then it's turned around. Now it's looking to go short. Okay, so that long trade is closed out. If you'd held it all the time till it actually turned around, you wouldn't have got great many pips. You would have got about 50 odd pips on that. But it's now waiting for a new direction. It's either going to go short if it breaks under this 20 period, or back long if it's going to break the 50 period and over the 100. So don't predict. That's an end of day analysis. From a scalping point of view, use exactly the same sort of rules. So use the same setup on a 1 minute chart. And what's this saying? Well, this is long. It's been long this morning. It's looking to go short at the moment because we've got a bit of a rollover here on the 1 minute, but we haven't crossed yet. In fact, it didn't cross. This is looking to go down now, having rallied up the last few minutes. So have a strategy, trade your strategy straight. If scalping is for you, Eugene, you use trend following techniques. You can use mean reverting techniques. It's not about the techniques. It's not about the strategy. It's about you and how you apply it. So this is looking like a potential short here, and that would have triggered short now just in that minute. So that long has closed out here. Looked like it was going to go long, didn't happen, closed out, and now it's gone short in the last minute euro on this particular setup. Okay, so but don't get too hung up on it, whatever you do. Okay, I'll guess the data might have come out, which is why we got a bit of movement. I don't know. Let's see if I can bring in the event calendar. Where's my calendar gone? What time is it? Education. So I'll have a look at the calendar in a minute. What time is it? Oh, no, we're run over time. We're over 15 minutes. So sorry about that, guys, but there's lots of questions still in here. So how very strange. It's not showing the ADP. So ADP is coming in a minute. I'll bring it in when it breaks. Remember, it was around about 195,000, 200,000 expected. But we'll see what it says. So where did I get to? I'm going to have to wrap this up, guys, because Okay, gold hit 1665, time for a sell. Yeah, that's a definite sort of a resistance area, 1665. But it's looking relatively strong today. But that 665, 1660 zone on the daily time frame is a key resistance where the 20. You can see that. I can't see that. You can see where that's where the 20-day moving average now has moved down here to under 1660. So this is a key resistance area there. You're absolutely right, Koloki. I'd say that's see. Pound, yen, Mario, we had a look at earlier. I don't know if you were here. Please let me know. Gold, we looked at. Gold. Everybody's obsessed with gold. I think gold would rally, but soon bearish. I expect that. Again, it doesn't matter what you think or what you expect, Abdul. Follow the reaction to the news and the market and what the market is doing. As I say, from my analysis, gold is long today. It's tried to poke to 1655, a bit higher. So look at the what the news is telling us. Where's my news gone? So ADP is better than expected, quite significantly better than expected, guys. It's come in at 239,000. So that'll be weak for gold, good for the euro, that news break there, because that's showing that the private payrolls is stronger than expected, significantly stronger than expected at 235,000. So you'd expect on that news announcement, the dollar to have accrued, and that's why we're perhaps seeing this move in. Look at gold in the last minute or so. Let's go that in a minute. Gold has reacted negatively to that breaking news. There's the news a minute ago, and it's moved down to test 1665. So it's a probably positive dollar news item that certainly. Okay. Will the dollar yen continue up? Well, it should from that data. I mean, it's been down today, dollar yen. Here it's the 1 hour chart. It's bounced already from 147 and it's moving up on the ADP number here, 147.25 now. So here on the 1 hour time frame, it's been 15-minute time frame here. It's been short, went down. Now it's looking to go long in this current time frame. But the daily, the 1 hour has bounced off 147. As I said earlier, the resistance is here at 147.50 and then 148 to the upside. See what the Fed say later on. My name is DeCosta is saying his account's being disabled. My name is Mohammed. Okay, I'll have a look at that for you. I don't know what that's caused that. There's some reason for that usually. Hello, do you think it have an aggressive impact on the market? Well, it's not an aggressive impact, but it's an indicator, a much better indicator than it used to be of non-farm payroll. So that's positive for the US economy. But as far as the Fed are concerned, Michael, it's relatively it adds to their mix. Whether they're going to change rules on that one data point, they're not going to. Where's mine? Because it's popped over there. There we are. So as you can see here, it's coming better than expected. 239,000 compared to 195,000 expected. So it's a significant beat. I don't know the breakdown of it yet. So that's positive for the dollar. That's how it's been. That is because it means that the Fed are less likely to pivot lower earlier. So it's this higher for longer mantra which we talked about at the beginning of the session, which is likely to prevail. But never say never. And say dollar yen on that reaction is back from a 146.80 low to 147.25. So it's on the up to the upside. Okay, I'm getting a bit tired now, guys, so I'm going to wrap these up. There's still quite a lot of questions here. Oh, everybody's just saying hello. Okay. Where was I? Hello. Vicky's saying, please, what moving average line values are you using? Right, Vicky, nice question. The values here, Vicky, I hope you're still here. The blue line is the 5-period exponential moving average. The yellow line is the 9-period exponential moving average. And the magenta line is the 21-period exponential moving average. So it's the 5, the 9, and the 21. Okay? Hope you got that. 5, 9, 21. Watch the webinar. Like I said to somebody earlier, go to our website, watch our webinars. And we'll see. Stefan, will gold go after news? We tell you what the news is, Stefan. Don't try and predict stuff. Gold is currently moving up quite nicely. This is the 1 hour. It's still holding to the upside, even though that was a strong dollar positive ADP. That might have already been rubbed out. Lucian saying that news. Well, we'll see how it pans out. But gold is still on the upside on the 1 hour. The 30 minutes, it's still moving up. And even on the 5 minutes, it reacted. That's when the news, the news is broke here. No, the news broke here. So interestingly, gold is actually moving up on the news. So we'll see. I mean, it might have been, excuse for people to trade ahead of FOMC. But the ADP data compared to the FOMC news later is very, very sort of insignificant. So gold remains to the upside, testing yesterday. It's over yesterday's highs at the moment at 158, so 1658. So it's moving up to the upside. Stefan says gold. What about gold? What is everybody obsessed with gold? So there we go. We just done gold. There's the gold chart, gentlemen, ladies. It's bid at the moment, trending today. The daily, though, remains anchored under the 20-day moving average. So it needs to break away from this 1658 area. It needs to get into 1660 and break over 1665. It's going to move up. And then the next big resistance is 1680. Big support, so far support this month sits at 1630, but big support sits below that at 1620, which was the low for September and October. October and September lows around about that 1620 low. So it's still looking a bit relatively weak on an end of day basis. It hasn't broken out of that. But today it's positive. 4 hour candles, 4 hour trade is also positive from this big candle here yesterday morning, and it continues to move up 1660, the next big line in the sand, and then 1665. See that more significantly there on that 4 hour chart. Okay, all you gold traders, hope you get a handle of that. Okay, cable we did earlier. See how it's reacted to the news. Actually, it's pivoting through 1500. It's just waiting. Really, it buys to the downside. So it's relatively dollar positive, the ADP number, but really NFP is the big one later. On an intraday basis here on this 1 hour chart, Jay, the 200 day or the 200 hour sits there at 114.64. So that's support. Yesterday's low took us down to this 114.40 zone. So see where we go there. How do you tell that the days are moving out? Raphael, I don't know what you mean, a day. It depends on the time frame, Raphael. Watch our webinars on how to use moving averages, okay? I've got lots of questions still to answer, but that's how do you tell the days moving average? But that's, to follow which way the trend is going. That's what moving averages do. They smooth out the price action. The lower the moving average number, the closer it is to the price action. So you can see the blue line here. The 5 period is always closest to the candles than the magenta line, for instance, the 21. Okay. What trend analysis is best for beginners? Pearl, start with some simple things that are like on here. To have a look at Bollinger Bands, moving averages, and Bollinger Bands, moving averages, and RSI, let's say that. Okay, but watch our webinars on all the technical analysis. But Black Pearl, my friend, it's not about the technical analysis or trend analysis. It's about having understanding the markets, understanding spreads and leverage and margin, and having enough money in your account to be able to trade the right sort of lot size for your account as well. Most people trade lot sizes that are far too big for their account size. So, but watch our other webinars on that, my friend. Vicky, we just answered that, didn't we? So you have to ask twice: euro, gold, and gold. I'm not going to. About gold. I'm not going to repeat it. Well, let's finish with gold, as everybody's asking about gold. I've said it 100 times in less than it feels like it. It's trending higher, depending on your time frame. So, what do I expect from FOMC? If the FOMC suggests that they will go 75 basis points tonight, if they're talking about, they even mention 50 basis points in December, which I don't think they will, that will pull the dollar down. If they may have to keep aggressive, that might pull the dollar up. At the moment, gold is having a good day, and with 5, across trend following strategy from this morning is $8, $850, 850 pips to the points to the good. We're $8.50 to the good. Our stop loss is probably around about here, 88, our entry point. So we've priced in our profits at the moment, likely to close it out before FOMC. But interestingly, it's continued to move higher on the ADP number. I thought we might have had some moves down, obviously volatility, but it's continued to move higher in the 15 minutes. So gold continues to be bid for the rest of the session by the looks of things. Potentially, I shouldn't say that. It's really, really all about the Fed in a few hours' time now. But let me leave you with the gold chart on the 1 hour time frame, continuing to move up from yesterday's lows all the way down here at 1630. We're over 1650 and we're currently trading at 1657.50. So gold looks pretty big. Next big resistance, as you can see, hopefully you can see very clearly here, 1660 and 16.5 takes us back to this test here, the 27th, 28th of October. And on an end of day basis, if I zoom this up, you can see why 1660, the blue line here, and the 1665 level is a big resistance level from that end of October level. So that's where we are. Raphael, I don't understand what you mean. In terms of pips before a market stagnates, or is it affected by time? I don't know what your question means, Raphael. Raphael, how do you tell a day's moving average in terms of pips before a market stagnates, or is it affected by time? If you're looking for a momentum or how far things move, Raphael, the best indicator, or one of my favorite indicators, is this bad boy down here, the ATR, because the ATR tells you exactly what it says. It's the average true range. So how far this thing moves. So if we go, this is cable, for instance. So the average true range, you see, it's got quite it's amount of volatility. How many pips a pair might move. So today, currently, you can see this number here. The 14-day average, the amount of pips this pair, it happens to be cable, moves over 14 days, the average 14 days, is 169 pips. So that's quite a long way, isn't it? So you can use this in all sorts of ways. But as you see, the volatility is actually coming down since the big high-O we have here. But so currently we're at around about 170. So 170 is the average number of pips that cable will move. And that's why the ATR is such a powerful thing, because you could come in at any time of the day and say, well, how far has it already moved today from its, the range? And that's all it is the range. So it's the distance it's traveled. Is it above or below the 14-day average or the 10-day average or the 20-day average? That's when you change this. But as you can see, ATR is quite a good thing to indicate. As far as your question about moving averages is concerned, my default is really this one, the 20 period. So are we above it or below it? If we're above it, you want to be looking to go long. If you're below it, you want to be looking to go short in very crude, simple terms. Okay? Right, guys, I'm getting really, really tired now. I've been going for an hour and a half, and I'm going to wrap it up. So thank you for your time, everyone. What can you... Oh, you can see... Yeah, you can see my screen still. Thank you for your time, everyone. My charts are coming to an end. Tomorrow, as I said, webinar... 12 o'clock GMT, technical indicators with Otto. Lots more during the rest of November. 3 oscillators with me next Tuesday at 11 GMT, the RSI, the MFI, and the ATR, which I've just shown to our friend there. So ATR, one of my favorite oscillators. Live analysis every Wednesday with Andrea next week. Stochastics and scalpers trade management also into the middle of November. So we come into the third week of November. We got the awesome oscillator and trading the VIX index, as well as obviously live analysis. And then the last week we got the Doshin channel, Richard Doshin, one of the original technical analysts, one of the original components of technical analysis. What stock markets may look like in December coming into the end of the year from Andrea, and a live analysis on the last day of the month. So Take care, everyone. Thank you for your time. Any more questions? I was saying it's been an hour and a half here. It's normally an hour, but we've run over. People are always asking me about trading books. Any trader worth their salt should have a copy of these books. Certainly have read them, if not have a copy of them. The most important one in me, if I had to name one of these, it's probably this now, Trading in the Zone by Mark Douglas. But get as many as you can and implement them. Nakhil, no problem. Thank you for being here. To hear, go away, my friend. Don't spam me, my friend. Forex signals, 2-3 dealer signals. Yeah, that's great. But yeah, 90%. I love these sort of guys. I'm sure. And how long have you been going, Takia? Yeah, look at these guys. Yeah, Henry's 90% accuracy. Join me on Telio. So it's easy, isn't it? Get free signals, 2 signals a day. What? So trading must be easy, isn't it? It really isn't. Be careful what you see on Facebook and YouTube and Messenger and all general channels, my friends. So anyway, take care, everyone. Stay safe and all the best. And may your pips be with you, or somebody else's pips be with you. So as I say, if you want to follow me, our webinars, or email me, webinars@hfm.com. Our analysis is on our analysis page, and on Facebook, it's Stuart Cowell on Facebook. So take care, everyone. Stay safe. And as I say, may the pips and the trend be with you. All the best. Bye-bye.